Welcome to the second edition of Bang for Buck with Equity Access, brought to you by Old Mutual. On the show, we explore a wide bouquet of investment opportunities. We also give you tidbits on how you can maximize your returns. On this specific edition, we zero in on the most common investment asset class, stocks, also known as equities. I'm Eben Mabunda. Let's get started. Now, stocks account for a staggering 45% of all invested funds globally, making them the most important asset class. Institutional investors and some of the world's wealthiest individuals dominate the charts. Asset management companies, pension funds, banks, and private individuals known as retail investors leverage stock market capital gains and dividends to achieve capital growth. But of course, investments in stocks often give one a jungle experience, presenting more questions than answers and leaving many clueless as they cannot tell left from right. Buckle up. We'll take you on a trip around the subject to find out what stocks are, how they work, and help you on how to assess the associated risks and rewards. Now, as alluded to in our previous show, a stock is a unit of a company's overall shares or stock. A stock market, also referred to as an equities market, is therefore a market for the trading of stocks where willing buyers and willing takers of stock meet for trade. In essence, the market gives companies access to capital to grow so as they can expand their operations, while investors receive a piece of ownership in a company with the potential to realize gains in their investment, of course, based on the company's future performance. As such, stock markets are often touted as being vital for economic growth. Now, that being said, it's interesting to note there are over 60 markets around the world, the largest by market capitalization being the New York Stock Exchange, the London Stock Exchange, and the Tokyo Stock Exchange, among many others. The leading stock markets on the continent of Africa include the Johannesburg Stock Exchange, the JSE, the Nigerian Stock Exchange, the Namibian, the Egyptian, and the Casablanca Stock Exchanges. Zimbabwe boasts of two main stock markets, the Zimbabwe Stock Exchange, the ZSE, and the US dollar-denominated bourse, the Victoria Falls Stock Exchange, the VFEX. Established in 1896, the ZSE is one of the oldest stock markets on the continent, currently flirting 56 listed companies, 48 of which are active. The bourse houses 12 primary indices, including the ZSE All Share, which is the overall market index, the ZSE Top 10, which denotes the market heavies, the ZSE Small Caps Index, which represents the penny stocks, plus the ZSE Medium Cap Index, which stands for the medium capitalized stocks. The VFEX, on the other hand, came into play in 2020 and was established in the majestic town of Victoria Falls and has just two companies listed on it. Other trading platforms include the FinSec Bourse, which houses a commodities market, and an exchange-traded funds ETFs market. Another interesting investment type trading in Zimbabwe, other than the plain vanilla or raw stocks, is an exchange-traded fund, caramel if you like. Now, an ETF is a collection of different stocks trading as one asset. Basically, it's a type of a security that tracks an index, sector, commodity, or any other asset, but which can be purchased or sold on a stock exchange in much the same way as a regular. In Zimbabwe, Old Mutual launched a first through the Old Mutual Investment Group, tracking the top 10 ZSE counters by market cap, and its performance has been phenomenal, having declared a dividend in the second half of the year.
In the equity market, investors bid for stocks by offering a certain price, and sellers ask for a specific price. When these two prices match, a sale occurs. Often, there are many investors bidding on the same stocks, and when this happens, the first investor to place the bid is the first to get the stock. When a buyer will pay any price for the stock, they're buying at market value. Similarly, when a seller will take any price for the stock, they are selling at market value. Now, picture a house with 100,000 bricks, with each brick costing $1. Hypothetically speaking, the house is worth $100,000, and you're presented with an opportunity to buy a portion of this house because the owners want to make renovations to the property and generate more value from it. You pay $1,000 for 1,000 bricks, and now you own 1% of the house. So the property gets renovated to accommodate more tenants and generate more rentals. Its value triples to $300,000. Effectively, the value of your 1,000 bricks has grown by 200% to $3,000. At the end of the first year, the managers of the property decide to issue a share of the profits or dividends to the brick owners at the rate of 10 cents per brick. In essence, you'll receive a dividend of 10 cents per each of the 1,000 bricks that you own, translating to a total dividend of $100, and you can smile all the way to the bank. In the second year, you decide to sell off 1,000 bricks so you can buy bricks in an industrial property, which promises to make higher profits. With the sell-off, you earn yourself $3,000 as your investment had increased in value. The price of a stock is subject to a good number of variables, such as sectoral trends, economic developments, the activities of competitors, the performance of the company in which you own stocks, and tech developments, among others. This means a fundamental analysis of a company is important before one invests. There is, however, room to invest passively through tracking indices or engaging experts such as Old Mutual Investment Group to invest on the stock market on your behalf. Risk arises when a company is not doing well and its stock value may fall. Stocks can be bought and sold easily and quickly, and the activity surrounding a certain stock impacts its value. For example, when there is a high demand to invest in the company, the price of the stock tends to rise, and when many investors want to sell their stocks, the value goes down. There are different business sectors that one can invest in. These can be tech companies, financial services, real estate companies, industrial firms, mining counters, agricultural and food processing firms, among others. There are basically two investment strategies: speculation and long-term investment. Back to that bricks illustration. If you had chosen to hold on to the 1,000 bricks for 5 years and enjoy dividends and capital appreciation in the process, that would translate to a long-term investment. The decision to sell off the bricks for an investment in an industrial property, then 6 months later into a lucrative mining adventure, would describe investment for speculation, a riskier strategy than the former.
So now, let me dazzle you with some stats. The equity touch, and here we go. In the 9 months to September 2021, the ZSE rallied by 226% vis-a-vis the 612% bull run reported in the comparative period of 2020. Now, gains in this prior period were mainly driven by inflation hedging, as inflation, of course, took its toll on the Zimbabwean economy. Now, the 2021 performance on the bottom here has largely followed a similar upward trajectory as indicated here. It's also very important to note that some of the factors driving this performance in 2020 have remained pretty much in place, and some of them include the high inflation and the fast depreciating local currency. However, the ZSE has seen a change in underlying performances of listed companies. The latest financials for the period up to June 30, 2021 are showing a very strong growth in as far as volumes, which would typically spur earnings as well as bolster valuations. Notably, the small cap stocks have rallied by over 2,000% year to date, ahead of both the ZSE All Share Index and the ZSE Top 10. Now, the movement in small caps is largely driven by low bases and the lagging effect of small counters in periods of volatility, as has been the case in 2021. The ZSE Top 10 continues to push upwards, spurred by gains in Delta, a heavyweight on the ZSE, and BAT, among others. Now, just for your notes, strong earnings released by Delta have helped spur a rallying momentum for the overall bourse. Now, remarkably, the ZSE All-Share Index is the best performing counter on the continent of Africa. I'm hitting my chart here. Right, as you can see from the chart, the Zimbabwe Stock Exchange, indicated in the green here, has been performing above the Ghanaian Stock Exchange, which would be the second best performing counter on the continent, followed by the Lusaka Stock Exchange. And I just threw in there the Johannesburg Stock Exchange just for the sake of comparison, as that is the most capitalized market on the continent of Africa. Now, to give you a breakdown of this particular stats, I added another chart here, which going once, going twice, and here we go, which would be the weighted average quarterly returns, which details the movement of these particular indices where specific quarters are concerned, as indicated here. So for the last quarter, that would be from June of 2021 right up until September of 2021. It is still also interesting to note that the ZSE All Share moved up 33% ahead of the Johannesburg Stock Exchange, which inched 25% higher, and the Lusaka Stock Exchange, which gained 12% over this specific period in question. Now, just to give again perspective, it would be important to note that this has been very much of an eventful specific quarter, as there have been recoveries bolstered by vaccination campaigns that have been rolled out across the continent. And now, to take it back as well, here at home, there have been some market vagaries playing out, the inflation that we mentioned earlier, as well as a fast depreciating local currency, at least on the parallel market, and a bit of some movements in the negative where the formal market is concerned. Thank you for staying with us. And in this very segment, we have a conversation with the Old Mutual Securities Operations Executive, who also happens to be a stockbroker, Mr. Regis Mtambo. Sir, thank you for joining us on Bank for Buck.
Thank you, Eben. It's a pleasure to be here.
Fantastic. To cut to the chase, of course, several brokers and brokerage houses across the market would have different pricing models for investors who are looking to invest on the stock market through them. Speaking specifically to Old Mutual Securities, what would be the barest minimum that would be a prerequisite?
Right. So for our digital customers, our minimum is at 500 Zimbabwe dollars. And for customers that open direct accounts, the minimum is 10,000 Zimbabwe dollars.
I realize. Now, this would speak to the entry onto the market. Now, let's talk about the exit. What's the time lag between the point that I decide to cash in on my investment and the time that I actually get my returns there?
Okay, so the ZSE operates on a T+3 settlement cycle, which basically means trades or transactions are settled 3 days from the date on which they are executed. For instance, if one was to sell their shares on a Monday, 3 working days would be payment by Thursday.
I realize. Now, speaking to the actual process of investing on the stock market and the method of going about it, they would be going through a stockbroker vis-a-vis investing directly thereon. What's the importance of investing through a stockbroker as opposed to going at it direct?
Yeah. So the most important thing is to invest. Right. By whatever means, whether you are going directly through a broker or you're doing so through a fund manager or a unit trust. So the advantage of maybe going through a stockbroker is that the investors may feel sort of in control of their portfolios, since they have a direct say on what goes in and out of their portfolio. Whereas we found that certain investors also appreciate the convenience that comes with having a professional maybe manage their funds, and they would feel more comfortable maybe having a fund manager invest on their behalf.
Pretty much bog standard. Now let's talk about the phenomenal run that the Zimbabwe Stock Exchange has had up to this point. It is up over 250% year to date. That means over the past 9 months plus. What informs this run that we are seeing?
So it's various issues that could be contributing to that. I think part of it has to do with the companies that have been posting good performances, that have turned around their operations. I think following the ravages of COVID-19 over the last year or so. So some companies have emerged from that stronger, and the market has taken note. Also, if you're looking at the economy itself, there is still an element of inflation about, as evident even on what we are seeing in the currency situation. So all of those things sort of drive investors to seek a safe haven, of which the ZSE is one such safe haven for them.
So if I'm getting it right, just for as long as the macroeconomic issues are not resolved as yet.
Maybe our economy remains in this current state. I believe that you'll see funds flock to the ZSE and other investment alternatives.
You just mentioned shelter. How useful and stable would be the ETFs market given the market vagaries playing out in Zimbabwe?
So I think we just need to demystify what the ETF is. The ETF is basically a derivative instrument. It derives its price, or it's supposed to derive its valuation from the in Zimbabwe's case, the ETF we have is comprised of the top 10 companies by market capitalization. So it basically has to mimic, or it mimics the movement of those 10 stocks that comprise the ETF. So should the companies in that ETF continue doing well, like we've seen in the recent in the recent weeks, in the last 2 weeks or so, the rally that has been there has been largely driven by the blue chip stocks, your deltas, your inscores, which are part of this ETF. So should those continue going up, it's likely that the ETF itself will continue to go up. Just to emphasize, certain investors actually prefer the convenience of an ETF, because instead of buying the 10 individual stocks that make up that ETF, you just buy the ETF itself and go with that.
I realize. Lastly, how does Old Mutual help those who are looking for exposure in stocks?
Right. So at Old Mutual, we have two businesses largely focused on investment in the capital markets. It's Old Mutual Securities as well as Old Mutual Investment Group. So through Old Mutual Securities, you can get access, direct access, or digital access to trade on the Zimbabwe Stock Exchange through Old Mutual Securities. Alternatively, you could prefer to have your funds managed while you go about your core business. In that regard, we have the asset management business that will take care of that either as an asset management account or unit trust.
Old Mutual Securities operations executive and a stockbroker for the very firm Regis Matambo. Thank you, sir, for joining us on Bang for Buck.
My pleasure.
True wealth is about more than just how much money you have. It is about the choices and lifestyle your money enables you to enjoy, and it is unique to each individual. To maintain and grow true wealth, you need the right guidance and plan, one that is tailored to you. That's why Old Mutual has brought together the expertise of a number of specialists in one business, dedicated to growing your wealth. Old Mutual Securities Private Limited, OMSEC, provides stockbroking services on all three of Zimbabwe's capital markets, the Zimbabwe Stock Exchange, the Victoria Falls Stock Exchange, and the FinSec. We offer research services covering listed companies and macroeconomic commentaries, execution of securities trades across all three capital markets, trading in ordinary shares, exchange-traded funds, ETF, and bonds. Our dedicated team of experts are passionate about enabling our customers achieve their lifetime financial goals through offering sound investment advice and execution of securities transactions on the Zimbabwe capital markets. Contact Old Mutual Securities by calling +263 242 308 400. Sending hi on WhatsApp number +263 779 699 699 or our Facebook and Twitter pages at Old Mutual ZW. You can also visit our website www.oldmutual.co.zw to grow your wealth with Old Mutual Securities. Old Mutual. Do great things every day.
A shelter and a hedge against the inflation and some of the market vagaries playing out in Zimbabwe. Those, of course, are some of the key takeaways from the conversation that we had with our guest. Well, that's a wrap. Please do like, follow, and subscribe to our YouTube, Facebook, and Twitter channels at Equity Access to access more content. From the Equity Access team and I, Duncan, until next time, stay safe.